Same thing with Bitcoin. In the early days, we're like, I don't want that. Today, like, I get it. It's a perfect store of value. It's a better form of money. And over time, that uncertainty about the outcome will diminish. And so the question is, are the days of 80% drawdowns over? Well, the first cycle drawdown was 84. Second was 84. This last one was 77. I think this next one likely is a little bit less. Why? Well, because I think the upside of this cycle will be less too.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In today's video, Mark Yusko shares his prediction on the adoption curve of crypto and its potential to reach billions of users, the importance of building a network of trusted sources, and staying informed about new tools and technologies. So without wasting any time, let's dive into the video.
If you go back to each of the previous halving cycles, we had these big run-ups. Went to 2.3, 2.4 times the fair value. Well, why would anything trade above fair value? Well, humans are going to human. Humans, mostly they can't do math, to our conversation earlier. But then secondly, they FOMO, right? They see something moving and they got to get in. So the price goes up above fair value. Right. But then what happens is leverage comes in and the gamblers and the speculators come in, and that pushes the price way above fair value. But at some point, gravity takes over and you head back toward fair value and you usually crash right through. And then you get to a washed out, really undervalued because you got margin calls and you got the unraveling. Look, what's going to happen, in my opinion, is the halving's going to occur. The fair value is going to increase because that's what happens when the halving occurs. The fair value goes up because the price needs to adjust to support the miners. Now, in this cycle, the fair value probably doesn't go up as much as previous cycles because we have this pre-halving event of the ETF, which boosted the price closer to fair value so that most of the miners are doing okay right now. But the fair value is probably going to go up to, call it, 75-ish K would be my estimate. In a normal cycle, then the leverage comes in and it pushes that to 2.3, 2.4 times. Well, there's not as much leverage now because, they got rid of CZ at Binance, so that's not as much leverage. And they got rid of some of the old bad actors in terms of the leveraged lenders. So let's say we only go up 2 times fair value this time. So we go to 150-ish. Okay, well then what happens? Well then when you're so far above fair value, that's when the short sellers are come in and some of the people say, okay, that's good enough for me. I'll take a little profit. And then we start to go down. So how far down do we go this time? To your point, if somebody bought in today at 68, 69, whatever, and it's 150, they might not sell right away.
And they won't. Yeah.
You and I both know there are a whole bunch of people who are like, I'm going to wait for a pullback. And then it's going to go up some more. And they're going to be, I'm going to wait for a pullback. And then it's going to go up some more. And when it gets to 110, they're going to be like, okay, I'm in. Well, then if it goes to 150, they're like, oh, this is awesome. But as it starts to roll over in the next bear market, which I think happens, at the end of 25.
Yes.
Then what happens?
Bitcoin stabilized at around $69,400 on April 10, 2 days after almost reaching its record high of $73,800. With less than 10 days left before the Bitcoin halving, will the previous all-time high price support level hold? This marks Bitcoin's third failed attempt to jump decisively below its all-time high, reflecting traders' uncertainty near record levels, where profit-taking or increased selling pressure prevents further upward movement. Bitcoin's back-to-back upside rejections increase its potential to undergo sharp price declines in the coming weeks. Arthur Hayes, co-founder of BitMEX, predicts that April's Bitcoin halving, alongside strategies employed by the U.S. Federal Reserve and the Treasury Department, will trigger a fire sale of crypto assets. Hayes highlighted that the latter half of April could pose significant risks for volatile assets, a period marked by a decrease in liquidity due to U.S. tax payments, the commencement of quantitative tightening by the Fed, and the pending utilization of the Treasury's general account. The precarious period for risky assets is April 15th to May 1st, he argued, adding, "This is when tax payments remove liquidity from the system. QT rumbles on at the current elevated pace, and Yellen has yet to start running down the TJA. After May 1st, the pace of QT declines, and Yellen gets busy cashing checks to jack up asset prices."
Yeah, well, again,
As a
the
slowdown.
4-year cycle. The 4-year cycle,
Okay.
I believe, is baked in because it's hard-coded around the halving. And the halving creates this impetus for price to rise. People FOMO in, and we get above fair value. Inevitably, an asset either stays at above fair value and grows into it. Now that's certainly possible. You look at like NVIDIA. Is NVIDIA going to stay at a crazy, ridiculous price? And is the value going to grow into it? Or is it going to crash down back to fair value like Cisco did, like Microsoft did, like Intel did? Here's the crazy thing. In 2000, Intel went up 20-fold over about 18 months. 20 times, just like NVIDIA, right? Everybody said their chip's going to change the world. It's going to be great. Today, 24 years later, it's down like 60%. Because what happened? NVIDIA happened. So is there another company
AMD.
come in and
AMD
help
really.
NVIDIA?
Yeah.
Probably.
It's possible. Yeah. Right.
Not today, but probably.
Yeah.
So my only point there is I don't think the cyclicality's gone. I don't think this is number go up in a straight line. I think we're going to have peaks and we're going to have troughs. And for a while, we're going to make higher highs and higher lows. That's called accumulation, right? So there's going to be an accumulation over the next year or so. Then when it gets too highly priced, there'll be distribution. The smart money, the people who bought early, or some of the whales, will start to distribute to the masses. And then when it falls, they buy back.
A Deutsche Bank survey reveals a divided consumer sentiment on Bitcoin's future. About one-third anticipate its value dropping below $20,000 by the end of 2024, a stark $50,000 decline from its current price, echoing the lows of a 2022 bear market. Only 10% of the 3,600 participants expected to exceed $75,000 by December. Meanwhile, 40% are optimistic about Bitcoin's long-term prospects, but nearly an equal proportion, 38%, foresee its disappearance. Crypto market analyst Rect Capital sees Bitcoin crashing to around $40,000 after the halving, citing its price moves around the previous 3 halvings. For instance, the chart below illustrates similarities between the price trends around the halving in 2020 and 2024. The circled area, highlighted in blue in the associated chart, is significant because it aligns with the region where Bitcoin has historically experienced roughly 20 to 40% retracement before its halving events. For instance, in 2024, BTC's price has pulled back by roughly 18%, closer to its circa 20% correction preceding the 2020 halving. That leaves it with more room to decline ahead of the 2024 halving, less than 10 days away. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.